The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we got 12 days before 2020 is in the record books as far as everything, and your taxes especially. And so we're going to make sure that if there's any way to save you money in the next 12 days, EG Tax is going to do that. And we want to make you aware of what the CARES Act has changed, what some of the things that were put into effect when the Trump tax bill was signed a couple years ago, how that affects you, and so that you can make some last-minute changes so that you can save money in your taxes and what's coming in down the pike should there be a change in the ruling class, so to speak, from the legislative branch. So we want to help you. Our phone number here in studio is 8030930. 8030930, star 930 on a cell phone. You can text us at 716-8030930. And I got my buddies here in studio with me, Christopher Fabian. Hey, Chris.
Hello, Esther.
And you're all dressed up like a bill.
I'm all dressed up. Go Bills.
Not like a dollar bill, but a Buffalo bill.
That's right. Big game
Go
today.
Bills. Go Bills. And Tiffany Fabian.
Hey there, Esther. Happy Saturday.
Happy Saturday. You got your Christmas shopping done?
I got in a dispute with one of my daughters, so she says I don't put enough thought into it. So Chris is doing
I
the
have
reins.
to tell you, I know your daughters. You could think until next year. I mean,
Right.
You know, it's tough. It's tough, and they love those innovative gifts. But
Yes.
good luck.
Yes. They
Anyway,
have
I'm
all
done,
the
and I
innovative
hope
gifts.
everybody, you know, with this Christmas is coming up a week from when? Let's see, today, Friday, right? Week from Friday.
A week from yesterday. Yep.
Yeah. So I just want to take time to wish everyone a blessed Christmas. I hope this is the time of family as best as you can do it in light of COVID. You know, pray that everybody doesn't cough on each other. Have a great time, and remember the reason for the season, right?
Yeah, I was with a client yesterday, and we were discussing a New York State love letter that she got, and she has already gotten the vaccine, and she's a registered nurse
Really?
at the VA.
Wow.
Yep, and she said there was a little bit of arm pain, and you know she has brand new twin grandchildren, and they're 5 months old, and she still has not held those babies.
Wow.
So-
I know it's a scary thing.
Yeah.
All I know is my heart breaks for the local businesses. I know the financial guys are really front and center of all that. I think as a thinking person, you say to yourself, does COVID not go into the Walmart? Must not go
Yep,
into
that's
the
what the
Walmart.
that's
Does
what the
COVID
financial
not go
guys
into
say.
Wegmans and Tops?
Right.
You know, the thing is, shutting down people's livelihoods is just unbelievable. And so if you're a
Discriminate.
taxpayer, we want to help you here today. 803-0930, 803-0930, star 930 on a cell phone. And, okay, the first thing I want to talk about before we get to the calls, and we'll get to all your calls, is unemployment. Now, the stimulus money you get, the $1,200 you got, and the additional money you may get this next week if they pass this the stimulus bill again, second stimulus. Stimulus money's tax-free,
Yes.
okay? However, unemployment, the pandemic unemployment and the New York State regular unemployment is fully taxable.
Yes,
it
ma'am.
is.
Not to confuse the two.
Nope. The stimulus was that $1,200 check. The unemployment is your $18,000 you got this year. So big difference.
Well, it might, you know, but I mean, some people didn't get 18,000.
Right, I know,
But
I'm just-
the unemployment, pandemic and federal unemployment, fully taxable. Now, I know we're looking for refunds as soon as the IRS opens up. They're supposed to open up the 15th of January. People that can't file without putting the unemployment on their tax return, The state does not send out the form for unemployment. You have to go on the website and capture it yourself, or call and ask them for the form to be mailed to your house so you know how much the unemployment is. You have to claim the unemployment. You have to get the form yourself. Otherwise, it could hold up your refund, and that would be really a tragedy.
Oh, yes.
Right?
And big, because that can change everything on your tax return. Credits, earned
it's
income
a lot
credit.
of money this year.
Yep.
So stimulus tax-free, unemployment taxable. You have to get the form yourself through the New York State unemployment website.
Yep, the 1099. Yep,
All right.
exactly.
And then the second thing is, on your 2020 tax return, there's going to be a place to reconcile the stimulus payment you got with what you should have gotten or what you should get based on your income in 2020. So let's say you didn't qualify for the stimulus money because of 2019, your income being too high. In 2020, you might have lived on unemployment and your income went way down. So even though you didn't qualify in 19 based upon their $150,000 cap, this year your income, let's say, went down to 110,000, you would qualify this year. There's a reconciliation to show how much you got versus what you should have gotten using 2020 income, and that'll get you some more money. You want to make sure you do that as well.
That's right.
Right?
Yep. And then it looks like Congress is meeting and working hard on a Saturday, and so hopefully they'll hammer out another deal.
I hope they do. I hope they do. Their people certainly need the money. Let's go to the phones, and we're going to go to Chuck. Hey, Chuck, how can we help you, sir?
Hi. I have an estate that I inherited,
Okay.
and there's a CD that's coming due next year.
Okay.
Now, the interest rate will be like between $1,000 and $1,200. Do I do it this year or do it next year?
On a CD, interest is taxable as you earn it. They're going to send you a 1099.
Okay, so that would go against, if I don't inherit it this year.
All right, if it's still in the estate, you're going to have to do a fiduciary tax return, and it's going to be taxable to the estate. If it's given to you, it's going to be taxable to you. So whoever name is on the account as of 2020, that's who is going to pay taxes on it.
Oh.
You there?
Yes.
And one thing you want to look at, too, especially with the CD, how much is the penalty going to be for cashing it in early?
Are you cashing it in?
Since it's an inheritance thing. It won't,
Well, that doesn't mean you have to cash it in, right?
right, that's my question. Which is better?
Well, I mean, Chris is absolutely correct.
Is it reach
they
maturity?
charge you a penalty. However, you might want to call the bank because many banks are waiving the penalty due to COVID.
Well, they said they won't charge a penalty because it was death in the family. So.
Okay, so you, if you want the money, I mean, if it's getting 6% interest or 5% interest, you might want to keep it in there. But if it's only getting like 0.05%, you might want to cash it in.
Oh yeah, it's probably like 2% or something like that.
Well, if you got 2%, that's pretty good. But I mean, so if you're getting extraordinary good interest, keep it in there if you'd like. And if you need the money, cash it in.
But the interest has to be declared somewhere, either on the trust return or your individual return.
Okay.
Well, the question also is, what's the minimum amount? Because we were told if you get $600 in interest, you have to declare it.
No.
For a trust return.
All money that you get is taxable. On the trust return, if you have more than $600, then you're going to have to file a trust return. So if the trust receives less than $600, you don't have to do a trust return. But if you receive it personally, all money you receive is going to be taxable.
Okay, so that
Okay.
would require a tax return next year if I wait till next year.
Yes.
If it's
It's
more
more
than
than
$600.
$600.
Yeah.
Yeah.
Okay.
All right. Thank you very much.
All right, thank you, sir. I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break, 8030930, 8030930, star 930 on a cell phone. Our text is 716-8030930. We'll be back on the other side with your calls.
We are family. I got all my sisters
Hey,
with me.
that's our theme song. To us, your family. I'm Esther Gullius, the head mama. I'm here to help you with your taxes. We have 12 days before 2020's in the memory banks. We'll all be glad about that. But in the meantime, you still have 12 days to save money. We want to talk about that. If you have any questions, 8030930, 8030930, star 930 on our cell phone. And I know we got calls holding here, but want to go on here. Charity is deductible even if you don't itemize up to $300 this year. So this is a wonderful time of year to bless your favorite charity. But the other thing you might want to think about is if you give appreciated capital assets, you do not have to pay the tax on the appreciation, and you can take up to 30% of that appreciation against your adjusted gross income. So let's say, for instance, that your adjusted gross income is $100,000, and you had a stock that you paid $4 for, and it's now worth $30,000. You would have a very large gain, but you'd be able to take that entire almost $30,000 in gain and not have to pay taxes on it and use it as an itemized deduction. If you're paying cash contributions, you can give up to 100% of your adjusted gross income because of the CARES Act, because of the corona situation. So that's something you want to think about. So I know myself, this is a time of year where I kind of catch up on charities that I haven't given money to. And so if you have gifts of appreciated capital assets, this is a great way not to have to pay taxes on it, and you get the tax deduction at the same time.
Right.
Right?
Yes.
Okay. Let's go to Kevin. Hey, Kevin, how can we help you, sir?
Yeah, hello, family. How you guys doing? Hey,
Good.
Merry Christmas. Good. I think I accidentally deleted an email from the Department of Education or the provider relating to student loans. Do you guys know anything from the IRS if this is going to be extended or December 31st? The little reprieve they gave folks is going to end?
I believe they went to the end of January now. I think that's all going what they're talking about right now in the new stimulus bill.
Oh,
But I believe they extended it to the end of January.
oh, okay. All right. Well, that's basically
And of course, keep your ears tuned. As soon as we find out what they pass in the second CARES Act, which we hope it'll be today, we're gonna let it. It'll be on our website, and we're gonna let all the media know so everybody's aware of that. Okay.
okay. Great. Well,
Hey, thanks for your phone call. And you sound like you're from Jamaica, man.
Beautiful accent.
there you go. Yeah, a little more south, Trinidad. Yeah, there you go.
Trinidad. Well, that's great, Kevin. You must be here freezing your coconuts off.
Oh, I live this time of the year.
I love this time of year.
Well, Merry Christmas to you.
Merry Christmas. Take care.
All right, thank you. All right, we're going to go back to the phones. We're going to talk to Mark. Hey, Mark.
Oh, wait, hold on. Oop, there we go. Hey, Mark.
Happy holidays.
Happy holidays
Happy
to
holidays
you.
to you, too. How can we help you, sir?
It's just a simple, fast question. I wonder if I'm in trouble. I filed my tax returns via federal and state, and around July 10th. And I haven't received my federal yet. I received the state a long time ago. Is this common with you, or should I contact the government?
Did you mail it in paper?
Yes, I did.
That's the problem. The IRS is still way behind on the mail. Okay, when we talk to them, we ask them what's an ETA on catching up, and they just laugh. They can't even tell us. So what I would suggest doing is keep checking where's my refund on the IRS's website, and come about January 20th, if there's still no information, come into our office, and then we can e-file your return.
Right.
And
so
actually-
even though right now they're doing a transition between the 2019 tax filing and the 2020 coming up, so they're upgrading all their computers with the new software. Around the 20th of January, that transition will be done, and we can go back to e-filing, and we can e-file the 19 return, and then in 10 days you'd have your money.
Or if you want to, this is my last week of work before the holidays, you can call me Monday through Wednesday or Thursday, and I could do a conference call with you, obviously no charge, to check on the status, because pretty soon I get pretty busy and I won't be able to do that. So you're welcome to call the office.
Right. So there's your options. Wait till the middle of January. We can e-file it, and if it still hasn't shown up, we'll e-file it. That would supersede the paper return. Then when they would open the paper return, they go, "Oh, he's already filed," and they'll throw it away. Or
There is
you
a problem
you
with that.
or you can just wait and see when it comes out in the wash, or you can call Tiff and she'll give them a call for you to see what they're saying. Okay?
Yeah, what happened was I e-filed it, but before it was for my daughter. And what happened was when the pandemic came out, she had filed her returns, and we ended up doing it without the income tax return. So when we did file it through the e-file, they kicked it back and said because there was a paper one for the pandemic money, I couldn't file it e-file.
Okay, so what we need to do is
Call.
You want him to call Tiff
Yeah.
on Monday at 632-7886.
And if it's your
she'll help
daughter's
you-
return, we're going to need her on the phone.
Right.
Well, yeah, she would definitely do it. I'm just following up for her.
I know you're a good daddy, but we'll help her.
Well, she took it out on me, Esther, on the holidays. Believe it or not.
I do. Okay, we'll get so 632-7886 and we'll help you, okay?
Give your office a call if I don't hear something.
All right, thank you,
Perfect.
sir. All right, and then we have Mike.
Mike from Wheatfield.
Hey, Mike, how are you?
Good. I have two questions. Now, one concerns something you mentioned. Under the CARES Act, you can take that $300 deduction that goes directly off the adjusted gross income.
That's correct.
But it says, article says a public charity. Does that include donations to a church?
Yeah,
Yes.
that's
Any 501c3.
right. A church is automatically a qualified charity. And then the other would be 501c3s. What they're saying is if you gave money directly to Aunt Sally, she doesn't have food, that wouldn't be deductible.
So-
If you went to a GoFundMe account that isn't in a 501c3, that wouldn't be deductible. But if you give it to any public charity and a church is considered that, it would be up to $300 without over and above without itemizing.
And the other question has to do with something like if there's a will, someone died, and when it's probated, is that when the assets? What year would that? If someone died in 2019, a lot of people have,
Because of COVID or 2020.
But I don't understand.
What's your question?
So are you? I mean, but I don't understand.
He says
If
it's
you
going
don't
to probate.
If you go to probate, is when you get the asset. That's when it becomes your income. If it's from just money from a savings account, that's not taxable. Not everything you inherit is taxable. Many, many things that you inherit would not be taxable, such as bank accounts,
Okay.
such as
Here.
maybe stocks and bonds that you inherit until you sell them. It's not taxable. If you inherit a house where you're then going to sell it, you get a stepped-up basis right now, and then that wouldn't be taxable till you sell it. So it all depends on what you're inheriting.
Well, here this is a short couple of sentences. Biden is considering a change in how assets are valued when some.
He certainly is. He certainly is,
So back-
and that's something we were going to talk about as the show goes on. But one of the things, if the House and Senate all go Democrat, and with Biden being in the executive role, then and he wants to eliminate stepped-up basis, and he also wants to tax capital assets at the same rate that you would wages. Right now, it's very highly favored, and it would not be in the future. So, but we don't know until really this Georgia bill is the whole Georgia reelection is up in the air. So we'll
Right, but-
know better with Georgia. Yeah. Greg.
Yeah, I was going to say, now your family member passed away though in 2020 though, correct?
No, 2019.
29. Oh, so then it would still go by the old law, so you would still have the stepped up basis.
that's
It would
correct.
be for deaths going
And
forward.
this is only if they change the law. So this is what he's proposing, but it hasn't happened yet.
But like what they said, they might consider going to the cost basis. Does that include real estate?
Yes.
So, what if you got a house, inherit a house like built 40 years ago? It's going to be, a lot less than what.
It certainly is. Certainly is going to hurt a lot of people, a lot of regular people. So that's why we're hoping that the Republicans keep the House.
In the
I mean,
runoff.
the Senate. So,
Thank you. Keep us informed.
All right. Thank you, sir. Merry Christmas. All right. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You want to quickly read this, Tim?
Oh,
That,
Yeah, I have a
or
text.
do you don't- you think
It
we
says,
gotta do
"Happy
the-
We gotta do
holidays
the
to
news.
all at EG Tax family. Is the grant money given to small businesses due to COVID taxable?"
Okay, so that's a cliffhanger. We're going to break for the news, and we're going to answer that on the other side. I'm Esther Gulius, the tax lady.
We are family. I got all my sisters with me.
Hey, I'm Esther Gulius, the tax lady from EG Tax. We're wishing you a wonderful holiday season. Merry Christmas. We just thank you for listening to us. We certainly want to help you. Our phone number here in studio is 8030930, 8030930, star 930 on the cell phone, and you can text us at 716 8030930. Okay, so the question was, is the grant money that the businesses receive for PPP, is it taxable? So grant money is not taxable. Loan money is not taxable either. So if you are somebody that received, if you're a business that received the payroll protection money, let's say you got $100,000 of payroll protection money, and you don't apply for the forgiveness of the loan. It starts off as a loan. That loan money is not going to be taxable, but you have to pay back the $100,000. But if you apply for forgiveness because you spent the money in accordance with the terms of the loan, then that money will be forgiven. That also isn't taxable. The only difference between the loan and the forgiveness would be what, Tiff and Chris?
The only difference between the loan and the forgiveness is the loan you have to pay back the loan
And you can't deduct the expenses
from
that
the
grant
For the
money pays.
forgiveness.
Right. Exactly.
And the other thing we were going to look, we were talking about this yesterday, whether or not they're going to make you apply that forgiveness to whatever specific portion that the money was used for. We haven't found that out yet, right?
No, we have not heard anything.
But we are looking into it. So
Yes.
hopefully that helps. Okay, we're going to go back to the phones. And is it Dave?
No, we got Mike,
Mike.
on a cell.
Oh, Mike on a cell. How are you, Mike?
Wonderful. How are you? I'm driving
Good.
at the moment. I want to tell you, Esther, I was at your office a few weeks ago, and you did a wonderful job, and you really helped me out a lot.
Oh, that's great.
Question.
Well, we try.
I'd like to switch everything over to you people.
Oh, well, switch away.
Pardon?
We would be very blessed if you would switch over. Obviously, we want obviously to help as many people as possible, and so we're very thankful that you would think about that. So thank you.
Well, my question is, I've been with this other person for so many years that what do I need to bring everything over to you? What do if my income tax papers alone, or do I have to grab something from my old accountant?
Well, it all depends on whether you have depreciable assets. Do you have a rental property or a small business, anything like that?
Yep. I'm in self-employed. I do have rental property, and right now, last year, we put everything in a trust.
Okay, so what the trust would be brand new if you just put it in 2020. Is it a revocable or irrevocable trust?
I don't know how to answer
Can
that.
you touch the money? Can you move the money around? Can you
Yes, I could.
can you withdraw the money?
Right, I can withdraw it.
All right, so it sounds like it's a revocable, which would mean that it just goes on your tax return per everything else. But we would need a copy of your last year's return and the depreciation schedule.
And
so
you don't need to have anything
really
signed.
a good pardon me, Tim?
Oh, he asked if anything had to be signed by his old accountant or
No, not at all. But the thing is, if we could take a look, maybe if you bring it in now, we can input all the depreciation so we're ready to go when you're ready to go.
Okay, all right, I could do that. I was with Tim over there, and I enjoyed. It was very, very helpful.
Yeah,
All
Tim
right, I
is
could
wonderful.
set something up to do that. And then pretty much that's it. Okay, one other question now. On a trust, on a grant, what is the best place to look for different grants?
Well,
Well, it depends on the type
on
of
what
business.
kind of grant you want.
I think,
What,
like,
I mean,
if you're
what,
getting
are
a-
you looking for
if you're
the
going to
PPP
college,
money?
there's a website.
Are you looking for more PPP money? Is that what you're talking about? Hello?
Yes, can you hear me?
Yeah.
Yeah. Are you looking for more payroll protection money from the federal government?
Or just grants in general.
Just grants in general.
I think the Small Business Association would be a good place. The SBA. Any other suggestions, Chris?
Well, and you can also Google it. Businesses don't give out grants. You don't get grants willy nilly. So you'd have to have like maybe you're developing widgets and you're looking for widget grants. So I would Google it and see what you can
Yeah,
find.
and we're a
there's
member.
also grant writers that will that you can contact online too that
Yeah.
will give you that information.
And we're a member of the Amherst and the Tonawanda Small Business Association, so we could maybe ask them if they have any, or whatever town you're in, you could call your business association. They would also be aware of it.
Oh, okay.
Yeah, but when you come in this week and drop off your tax return, make an appointment and talk to somebody. We'll do the research for you.
You got it. Thank you very
Okay,
much.
thank you, sir. Merry Christmas. Okay, let's, before we go back to the phones, and again, 8030930, 8030930, star 930 on a cell phone. Our text is 716-8030930. Here's another thing you should do. You got 12 days. If you haven't, put money in your pension plan, especially if there's a match.
Right? You could be missing out on free money.
Right. You do not have to do a required minimum distribution if you were somebody that's over the age of 70 and a half in the past, or age 72 because they just changed the law. But in 2020, you do not have to do a required minimum distribution. So if you were going to talk to your investment advisor and tell them to take money out, you don't have to do it. There's no penalty for failure to do it. It'll go back to the way it was in 2021 unless they change that in this new stimulus package that they're working on today. Right?
Right.
Okay. Use cafeteria money. If you're somebody that has set aside money in a cafeteria plan, like for daycare or something like that, make sure you get your money spent, because if you don't use it, you lose it. And
That's
you got 12
right.
days.
Yeah.
Yep.
I would suggest you talk to your financial advisor about your position in the market, whether you have big gains. If there's any losers in your portfolio, I would sell those, because then you get dollar for dollar losses against gainers that you have, and you can save yourself a lot of money from the sale of capital assets. So that's something to look at. And of course, just like our caller said before, they are looking under the Biden administration at getting rid of the stepped-up basis on inheritances of capital assets, and they're talking about taxing the gains not at favored tax rates like they are now, like 0%, maximum 20%, but taxed at regular rate. So we're talking about 38, 39%. So that's a big deal. All right, let's go back to the phones. And we have Dave.
Dave from Lockport.
Hey, Dave.
Hello there, all three of you.
Yeah.
Hello.
Merry Christmas.
You too.
Happy holidays.
I try to always come up with an off-the-wall question.
Oh, we're so glad.
You guys, you know, the Dennis Kitchen commercial reminded me of this.
Yeah.
So I was thinking, if you guys don't know the answer to this, maybe someday he could talk about it.
Yeah.
These commercials you hear where supposedly the deeds of our houses are just floating on the internet for latch onto and take loans against, and the rightful owner is going to get thrown out of their own property. I mean, they're always trying to scare us.
Title insurance.
Is this a valid thing that happens?
I will tell you, I've heard it myself, and I've trembled a little in my own boots. I don't know. I think that would be a good question for Dennis. We will contact him this week and find out. We'll have an answer for you next week.
Yeah.
Because you know, it would seem to me that it would. I mean, we're trying to get a property sold ourselves in the company, and it's tough to get it done. So I don't know. I don't know if it's easy to have the title taken out of your name or not, but they said that it happens.
Maybe it never happens in
maybe
New
another
York
state.
because New York is so hard to get titles through.
That's true.
Maybe it
That's true.
happens
But
in
we
different
will find
states.
out. That was a great question.
Yeah, well, thank you. And can I one quick comment?
Yeah.
From my understanding, Esther, you bring up once in a while, you know, we have to wait and see what happens with Georgia, the 2 Senate races.
Yeah.
My understanding is if those nitwits running the state down there would just get rid of the voters from the presidential day, November the 3rd, that weren't old enough to be qualified to vote, then those 2 Senate races would already be settled and there wouldn't even be a need for a runoff.
Well, I mean, look at from your lips to God's ears, right?
It's bizarre.
I mean, I'm still waiting for the miracle to happen. So
Yeah. But they,
I mean, I think everybody understands
Illegal votes.
that there was major problems in this election. Whether anybody thinks it was major enough to have affected the outcome, one doesn't know. But I still think that it looks to me like they're going to try to get this to be a runoff in the House of Representatives. Are you aware of that?
Yeah, I'm aware of it, and I know it's a long shot. But if this voting systems, the machines, if it's not fixed now, it's never going to be. It's sayonara.
But the Supreme Court did take those 2 cases yesterday.
Yeah, but they wouldn't touch the one from Texas.
I know. It was interesting, though. Don't you think possibly that they took it because there was a backlash from what that aide had reported that Roberts screaming behind in chamber?
Exactly. This is to appease us because I don't know how many other people, but you know we always get screwed again. And to me, I call him Chief Justice Benedict Arnold. I don't even use his right name anymore.
Yeah.
It is. I have to say, I'm really surprised at Roberts.
No, I'm
Really
not. Not
surprised.
after what he did with Obama.
Well, that's true. That's true.
All right.
Anyway,
Good one.
hey, thanks for listening. I hope you have a wonderful
And we'll get your
Christmas
answer
and-
next
and,
week.
Keep
All right.
praying.
Call me up.
Keep praying.
All right. And then we're going to go to
Dave on a cell.
Dave on a cell. Hi, Dave on a cell.
Afternoon. I like the one quick comment part there. But
Yeah, you're on a cell saying, "Oh, my time is running out. What can we help you with?"
my phone's almost dead. So
Oh.
I was talking to my financial advisor, and he told me that I could gift my kids, or I guess that's what the word you would use. I could gift them $14,000 a year. They wouldn't have to claim it on tax.
It's 15.
Actually, it's 15 now. And one of the things that Biden is proposing that it drops to 13,000.
But-
Again, this would be in a Biden presidency based upon what he said. But you can give $15,000 per person per year, and not have to file a gift tax return.
And the person would never have to pay tax on the gift anyways. Depending if it's just cash, there's no tax.
So let's say that you wanted to give $50,000 to your kids at Christmas time. They'll be really thrilled, by the way. You could give them the $50,000, and it would not be taxable to them. However, you would have to do a gift tax return to report the fact that you gave over 15.
Okay, because there was a couple different options. I could give them the cash, draw it out of my, or I was thinking about setting up a brokerage account for each one of them.
Well, again, anytime you do anything that's over 15, you're going to have to do a gift tax return. If you keep it under 15, it's not a problem.
And I just heard a word there. You said draw. You're not taking it out of an IRA or a 401k, are you?
I would take it out of an IRA, yes.
Because then you're creating a taxable event for you.
For you. Yeah. So
Okay.
the thing is,
Still too young.
let's say that you want to give $15,000 to your kid, and you take 15 out of your IRA, you're going to pay taxes on the 15. Your son or daughter is going to get 15,000 tax-free, but you're going to pay taxes on the 15. So that's not a good plan.
No, okay.
Okay?
Because I was wondering if I could just take it and give it to them, and then they could just revert it back to me also?
No. If you take it out of your IRA, you're going to pay taxes on it, unless it's a Roth.
Okay. The other question, I had another question about with the pandemic money.
Okay.
Everybody, I didn't receive it for my daughter because I got the claimer and she's in college. And I know there was talk about this coming year, 2021, that since I couldn't claim her because she was in college, is there going to be any credit that I'll be?
You can still claim her if she's in college. You can claim your kids to the age of 24 as long as they're in college full time for at least half the year. And as a matter of fact, you usually always should claim them.
Maybe he's talking about
The stimulus.
He's talking about the stimulus thing, the reduced payment because she was in college.
Money for her.
Yeah. Well, there is going to be a reconciliation on the 2020 tax return. So, depending upon your situation, you may end up getting money that you didn't think you were going to get before.
Okay, that was my question, I guess.
Okay.
So.
All right. Well, Merry Christmas.
Same to you. Stay.
All right. Thank you, sir. Okay. Why don't we read we're going to take a short break. We're going to be back on the other side with your questions and your texts.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout.
Hey,
Come
we're
on
Buffalo
now.
Bills supporters. We sure hope the Bills pull another one off.
You
Now-
usually watch with your hands on your eyes and your little finger so you can peek
Well,
out.
actually, I can't watch.
You're
Because
so
I care too
cute.
much.
Yeah.
When I really am into it, I can't watch. Just give me I'd rather just know it all at once. They won or they lost. Because winning and then having it go the other way, it's not good for me. Not good at all. Okay, let's. I'm Esther Gullius, the tax
You
lady.
want that text?
8030930, 8030930, star 930 on a cell phone. Yeah, text us.
If you are self-employed and paid into federal and state taxes all year, but when doing your return you find yourself having to pay, is there going to be a penalty?
Maybe. If you owe more than $1,000, there's potentially a penalty on the federal, but there is an exception to penalty if the reason that you owe money is last year's liability. You actually had in your withholding and your estimates were equal to last year's liability, and then lo and behold, you got money that you didn't know about, and so you owe more than $1,000. You would do a 2210, and you could get out of that penalty. Also, if
You paid
if
at least.
the amount that you owe is less than $1,000, there would be no penalty either. So you can do a 2210 if you have an exception. There's a reason why they're giving you an exception as to why you had a liability. You can get out from under it.
And then also if you paid at least 100% of your
Of
tax
last year's liability.
from
Yep.
of last year.
Okay, before we get to the phones, again, 8030930, 8030930, star 930 on your cell phone. Other things you should look at is pay up all your deductible expenses if you have rental property and businesses. Businesses that even end up with a net operating loss, it means that after all your income and expenses, you lost money. That loss can be used to offset other income. If that completely gets you below taxable income, then you have what's called a net operating loss, and you can carry that loss back 5 years and recoup money that you paid 5 years ago. Even though under the Trump tax changes, initially he said you couldn't do it. Now under the CARES Act, you can. Is that correct?
Right.
Yes? Okay. Okay, so that's another thing you want to take a look. And if you're a small business owner or have rental property, look at equipment purchases before the end of the year. You can, in many situations, make an election to just completely write off that asset in 1 year, and that could really save you a lot of money, especially if you're self-employed and you have to pay your own FICA. And speaking of FICA, if you are self-employed, you can make that election to push off half of your Social Security till next year, and the other half till 2022. So that's another thing you want to look at when you're doing this year's return. Believe me, on this year's return, there are a lot of things you need to know. Right?
Yep, definitely.
Okay, let's go back to the phones. We're going to go to Jim. Hi, Jim.
Hi, Esther.
How are you?
I'm well. How about you?
I'm good. What's new?
I remember you from the old Realty Experts days.
Oh my goodness, that is a long time ago. How can I help you?
Been around a long time too. For that. Okay, my question is this: I have an income property, a duplex in Tonawanda that's up for sale now. I bought it in the '60s, and their listing price is between 6 and 7 times the original price that I paid for it. With all the depreciation, how much of it is how much is subject to tax and that rate?
How much do you think you're going to sell it for, Jim?
About 170.
Okay, so after your expensive sale, let's say you come up with 100.5, because you have no basis probably except for maybe the land. You'll probably end up with about $140,000 gain. Now, you don't, because depending upon what tax bracket you're in, you're going to get a preferential tax rate on that capital gain if you could get it sold before they change the law, if they change the law. If you don't sell it before that, you might have to pay at what would be called normal tax rates, not preferential capital gains rate. So the other thing you could do would be an exchange. So you don't have to pay the taxes on it. You could actually exchange that property that you have in Tonawanda for another investment property, or passive investment, like maybe get involved in a 7-Eleven or a Dollar General.
The building.
And I think, pardon me?
The building that they're in.
The building, yeah. And so when you take a look at an exchanger, they can put you into that because the taxes probably will be something like $30,000 to $40,000.
I'm not doing that to all that.
Yeah, and then I don't know how much you earn, but if you have any suspended losses when you sell the rental, they become resurrected. I don't know.
He doesn't. I know who this.
Oh, you know who this
gentleman
person is? Okay.
I know his voice.
Same Jim that both of you know.
I do. I know. I know you very well. So anyway, you would probably save $30,000 to $40,000 by doing the exchange, as opposed to paying the taxes. And I know you and your wife probably would maybe just say, we just prefer to get out from under, but that's probably what it's going to cost you.
Okay. What rate would it be, and how much would be subject to it, you said?
I'm thinking about, I think the gain would probably be close to $140,000. So I think you will definitely pay, with the state of New York, close to 30%.
Okay, and then, with the state of New York, then.
Yeah, and don't forget.
It'll make your Social Security 85% taxable.
That's what I was going to say.
It's not a nice. Believe me, it is not a nice.
And the next year too, it could impact your IRMA for your Medicare coming out of Social Security.
Petition that.
Yeah.
Okay.
We'll be talking again, I'm sure.
All right, Jim.
Merry Christmas.
Merry Christmas to you.
See you too, folks.
Okay, a couple other things I want to get to before the end of the show. Remember, if you traded in when you're buying your assets, maybe you want to buy a new vehicle, truck before the end of the year for your business. If you trade in your existing truck on a new truck, the new truck, you're going to be able to have that option of expensing a lot of it, but the old truck on the trade-in becomes a taxable event potentially.
Correct.
Right? Because you no longer can adjust the basis. That went away. Let's see. Oh, and everybody, if you have wages or self-employment, regardless of your age, you can make contributions into an IRA plan. So it used to be it stopped at 70 and a half, no longer the case. You might be 75 and still working, and you couldn't put money into an IRA. Starting this year, you can put money into an IRA regardless of your age.
Correct.
Right?
Should we go to Dolores before the
Okay. We got time yet. All right. Hi, Dolores. How can we help you?
You just told me something really neat. Here's my question very quickly. Let me give you a round number. If I have like $55,000 income annually, which includes retirement, a small position I'm working at, Social Security, but then I have retirement, an IRA, and that would knock me up to $85,000. Now, what tax bracket, and how do I get my taxes down? What about contributions?
All right, so you can put money into an IRA because you said you're still working.
Well, I could give the whole dollar amount that is...
How much are you making?
Oh, it's just $600 a month.
Okay, so that's $7,200. Right?
Yeah, so you could put $7,000.
$7,000. So that means your wages are now tax-free.
Oh, well, how then would be how do I find decent places to give my money to that I trust that aren't crooks?
Well, I mean, financial institutions that are FDIC insured gives you a degree of comfort, and any investment advisor, like the financial guys, you might want to give them a call. Interview a couple financial institutions, but all these people all these firms are covered by state and federal insurance. So do your due diligence. If somebody's saying to you, Dolores, I'm going to give you 100% return on investment, I would run from that person.
Yeah, I know that.
It sounds too good to be true. It probably is.
But with the retirement stuff, do I put when I get check, or do I?
You have till April the 15th to make that contribution. So when we're doing your tax return, we can say, all right, Dolores, here's your liability, but if you put $7,000 away in an IRA, your liability drops this much, and you have up till April the 15th to do that.
Could it?
Okay, my dear, I've run out of time. I'm so sorry.
You got to call us on Monday at the office, and
Larry,
we'll help you.
I know you were holding. I'm so sorry. Larry from Georgia, our buddy, we couldn't get to you. We'll talk to you during the week. But for everybody else, thank you for listening. We're very blessed at EG Tax, and we hope that you have a wonderful Christmas time with your family and the end of Hanukkah. Until next week, I'm Esther Gullius, the Tax Lady, with Tiffany Fabian, Christopher Fabian, and EG Tax. Have a great week. Merry Christmas.